Now, European stocks, as we mentioned, are higher today, trimming the biggest weekly drop since March. And our Philip Enns is tracking the latest action from London. Philip?
Yeah, Scarlett, thank you very much. Good morning to you. There was not an awful lot of conviction initially in the market, but now stocks are higher across the board. You might argue about the DAX, as you has just shown. It's just swinging between gains and losses here. So we could quickly check in on the FTSE and the DAX and the CAC 40 again. So you see, two of them higher, the FTSE and the CAC, the German market, more or less unchanged, down 1.5 points, you would say. A little later in the session, markets may be more volatile, actually, than usual, because options on equity indices and also some individual stocks are going to expire. And keep also an eye on the political ramifications of the EU summit that is currently taking place in Brussels. The European Union leaders say they are spotting the first signs of a, quote, sustainable economic recovery, the so-called green shoots, and that make additional stimulus unnecessary, and said it's time to start really hatching an exit strategy. Now, some of the stocks that we're watching today over here, it's not a big surprise. It's going to be car shares yet again, but also from the media arena. First off, B here in Britain. The share is trading higher today because UBS raised the recommendation on the shares to buy from neutral, as you can see here, up by nearly 3%. And moving on to car shares, Daimler's long-term corporate credit rating was reduced late yesterday to triple B plus from A minus by Standard & Poor's, down some 1.6%. Worse off is the Volkswagen share, down 2.8%. Both Volkswagen and Porsche are in focus today because of the option expiry that I just mentioned already. Keep an eye on that, because Porsche has been really creeping up on Volkswagen with an option strategy in the German market. And also corporate news out of Porsche. They just reported a 15% sales drop in the first 9 months due to the recession. Quickly checking out Scarlett, again, the benchmark stock 600 index, because it's down some more or less 3% now for the week after a 3-month 36% rally that sent actually valuations up to 25.4 times earnings, and that's relatively expensive. Back to you, Scarlett.
Philip, some relatively rich valuations there. Well, that is your snapshot of European trading.